How's it going? It's Rocky. Welcome to week number 19 of the $2,000 weekly challenge. Every Friday, we release content from our experience trading the e-mini futures. And sometimes I also trade micro futures. For this week, it was a bit of a rough week, so this should be fairly quick. And unfortunate to say, it's one of my worst weeks so far in 2021. And I'm going to go through the account statement and also the trade that caused that for me this week. So for this week, if you look, we had no withdrawals. Definitely didn't make any money this week, and that's why I did not withdraw any money. Very painful, so I actually had to go to my emergency fund to pay for the bills this week. So for the week, like what I said, it's one of my worst weeks for 2021. Fortunately, we did not reach that $2,000 goal that we like to achieve. So for this week, we lost $6,552.25. So essentially, as you look at this graph here, on the middle, I have what our daily is, and on the right is the running total. Lots of red days. Pretty much, we didn't have a green day until Thursday and Friday. But if you look at our running total, basically we got down on Wednesday to as low as $10,299.07. So it's quite scary. And for the week, like what I mentioned, we ended it at $6,552.25. And I'm gonna go through that trade that cost us this really disastrous. So for the week, we ended the week at $15,928.43. We're not going to add anything there because we did not withdraw anything this week. If you check out our previous content, that's something we like to do. And we started the week at $22,480.98. And that's how we came up with our total this week of a negative $6,552.25. And whenever we're positive, there's something I do, and so where I divide it by 40 hours, which is typical hours, 9 to 5 in the U.S., just to see what that week hourly rate would be like. And then essentially for this week, we were bleeding $163.81 per hour. So it was quite a rough week, but the positive part that I can take out of it is we still have cash to trade, and we'll definitely bounce back. We've had essentially, if you check back on my content, we've had six green weeks straight, which is pretty good. Unfortunate part, with the loss this week, that takes away essentially our gain for the past 4 weeks itself. Now let's review the trade that cost us all this headache for this week. And unfortunately, I can't blame the strategy. I can only blame myself for this one because I entered it on my own without following the usual strategies that I did. I could blame it to FOMO. I could blame it to being bored, or I just could blame it to not quite sure what to blame it on. But let me talk about the previous trade that I did before that horrible trade that really caused me to maybe chase this trade itself. So as you can see here, it was a strong Monday, pretty strong, ending it last week too. And because of that, I shorted at 34,297 here. And if you look at the MACD, it was a bad short to begin with because I shorted right when it crossed over and it was heading to the overbought side on the stochastic RSI. And if you look on the right on the tick base chart, again with the MACD, there's no sign in there that says to short. Maybe just because the line started converging, so I was aggressive, and that's why I shorted. But again, not enough. But if you look at this stochastic RSI, it was a bit of a dip that maybe was the reason why I entered it. But again, not enough to short it. And because of that, shorted at 34,927. And it actually went all the way up to 35,000, which was our high for the week, or the high for the year, really, or ever. Bit of a drawdown there, and eventually I got out from 927 to 918. You see how I just got out because it was a bad trade to begin with. 27 minus 18 really just made $90 for this one trade here. And then about an hour later, so from 10:15, this big candle occurred that dropped it from 8.99 all the way to 8.11. So let's just say it's about $100 100-point candle. And if I had kept my short, I would have made $1,000 in this drop here. And it was just a crazy drop. And I think I had a bit of a FOMO, and that's the reason why right here at 11:35 we did enter long. And the reason we entered long, I'm going to zoom in a bit here, is again not following my rules. That's the problem there again. And essentially what happened here is I was just looking at the candle itself. I figured, hey, it's a big dip. That was a little too crazy. It should recover itself back. And then if you look at the candle, just your basics on how to look at a candlestick. If it's red, essentially on the body here where it starts is the open. And then the bottom here is the close. And then with the wick, the highest one would be the highest of that 5-minute candle. And the low here is the lowest of that 5-minute candle. And on this candle, essentially, it opened higher from the previous high on this candle. And I took that as a bullish signal, I guess. And that's the reason why I went long. So I went long at 34,809. And if you look at the tick-based chart, I guess I was following these two white candles. I was seeing it a bit diverging a little. And I thought, it'd turn around, it'd go back up. And here's the problem with this. I had a chance. I had a bit of a drawdown. So 34,809 got down to about 744. So that's already, about a $500 loss. I was trying to conserve whatever I gained the night before. And I think that's why I didn't want to get out. And here's the problem I've been having. You probably noticed in some of my content this past couple of weeks. I've been long bias. And what does that mean? What that means is whenever I have a drawdown or I'm down, I usually hold on to it more than a day, because with how the market is, the idea is the market will, always be an efficient machine that, always be going up, because that's how the market is designed, because companies are designed to make a profit and to improve themselves. So that's the reason why most of the market is always going up. Of course, it goes down because you have corrections or whatever reasons may cause it, but overall it always goes up. And that's why I've been long biased. And being long biased, that's been actually quite bad for me, because it causes me to hold my trade longer. And because of that, with this trade, as you can see, I drew a white line on where 34,809 is. I had 1, 2, and 3 opportunities to exit, break even, or a little bit positive, but I did not. And because of that, we had a crazy dip at power hour at around 12:45 here. So instead of just giving back my loss from giving back my gain from the day before, I saw myself being down $1,000 from this candle. And then before you know it, at 1 o'clock, 34,631, we're already down almost $2,000. And I held on because I had this belief that as long as I'm long, I'll be okay. And of course, at power hour, it actually went all the way up to about 732. So it was a nice signal here during Globex that I thought it would recover, but it didn't. It was a unfortunate a tease, I guess. I could have gotten out and just be down $1,000, but it didn't. Anyway, because of the panic from the inflation that kept going down, and then before you know it, when it opened up on Tuesday, you can see. So anyway, with that dip there from our entry of 34,809 to 33,990, let's just put the calculator here so we can understand what that is. So 33,990 minus 34,809, that was down 819 points. And since we were trading 2 contracts, and basically one contract is $5, 2 contracts is $10, we were down at one point $8,190 by the next day. So it was very scary, but it was one of those where I had to protect myself, and that's why I I basically, had to take one of the contracts off. And the reason I did that was I did not want to deal with a margin call when mark to market occurs. So if you're new, don't know what a mark to market is, essentially at 115, anything that's unrealized becomes realized, and they then deduct that from the cash balance that you have in your account. And then if you go negative, then you have margin call the next day. And that's the reason why I got rid of one of it, and that's why we avoided a margin call. So that was a Tuesday. And then Wednesday, I was hoping it'd come back again, but still again kept going down to a low there of about 33,466. So again, let's do the math here. 33,466 minus our entry of 34,809. So basically, if I kept those two contracts, then I would have been down $13,430. Thankfully, I only had one contract that had down. So still, mitigating the losses. And then the scarier part is what occurred, I guess, on Thursday, while I was asleep, because, I was too stubborn to close it out because I was long biased. And essentially got down to 33,200, again, with our entry of 34,809. If I had kept the two contracts at that low there, I would have been down $16,000.90. So that's a very crazy dip in just 3 days itself. And unfortunately, my cash balance starting the week was only $22,480.98. And, I just didn't have enough cash to be able to survive that. And you never know, it could have still kept going down. But thankfully, it recovered Thursday and Friday. So what I'm doing now is I still have that one contract that I'm keeping. And my goal is really just to go back to basics and go back to trading micros so I can, go back to my strategy and stop doing stupid things. And I'm going to wait. I'm going to wait patiently on this to see if we can get back to essentially close to 35,000 on the Dow. Definitely ended it this Friday at 34,352. So, maybe break even in about 500 points. But we'll see. We'll see how we play it next week. But definitely, I'm taking a bit of a break on the E-mini. And I'm just going to go back to trading micros, which is 1/10 of the side, to see if it'll help me go back to the basics and have more control and self-control, really, and not do some silly things. But anyway, that's just our content for this week. Unfortunately, I don't have a good trade to show you that highlights the strategy that we do use. All I can show you is what happens by me not following the rules that I put for myself and really having this bias of being long. So as a day trader for your futures, I should be able to go long and short at any time and be able to accept a loss, because we could have blown up our account this week and we wouldn't have been able to trade anymore. But thankfully, we save our capital. Yes, it's a really rough negative $6,000, $6,500 week, but hoping for a great week. So, you could, I guess, just like the content to get my spirits up, or share it to some friends of yours and see if they'll subscribe, and we can get the channel to a point where we can monetize it. But anyway, main goal of this is because it helps me trade better, and really hoping to share my experiences with everybody. And like I mentioned, subscribe if you learned something, or whatnot, entertainment, I guess. And if not, then hopefully I'll see you on the next time, and maybe you'll decide to subscribe then. All right, have a good one.